Investors, after quite a month, we have finally closed out the month of March and I can officially welcome you to April. Now this means two things. Number one, it's tax season, but don't fret because it also means that you're going to get to discover which stocks are in my dividend stock portfolio and just how much I personally was paid for being a shareholder of each of them. Now if you're new here, I'm Ari, your value and dividend investor on YouTube, talking about, value and dividend investing by way of sharing economic insights, stock ideas, and every now and then some words of wisdom from other masters of the market. As for today, your only job is to kick back and enjoy as I run through the 9 dividend stocks that paid me out throughout the month of March. You'll see the power of dividend investing firsthand. But before we dive in, please let me know if this content is of value to you by tapping on that thumbs up button. And if you're really looking to kick it into gear for a go-to channel for everything dividend stocks, join me by tapping on that subscribe button as well. Now, without further ado, let's dive right in. So it should go without saying that the stock market has been in an absolute state of flux, and as we gain more confidence back in the banks, investor sentiment has been rather positive, which allowed my account to climb back up to $109,417.94 as of this video. But as a dividend investor, I'm taking full advantage of discounted stock share prices whenever they present themselves. Now, I'll save the stock ideas for another video, but I do want you to get the most out of this video. So as I break down my dividend income, and before I get to my dividend tracker, I'm going to give you more than just what stocks paid me a dividend and how much they paid me. I'm going to also dive into my honest thoughts on the investments and whether these 9 stocks are worth an add to your watch list. So let's get started and rewind back to March 6th, where I received my first dividend paycheck from Southern Company, ticker symbol SO, which is an American gas and electric utility company that is actually the second largest utility company within the United States in terms of a customer base, which really boosts confidence for shareholders. At least it does for me, considering Southern Company won't just disappear unless 9 million plus customers decide to stop paying their bills. Now, as of this video, Southern Company is actually down nominally on the year, trading for $69.34 per share, but I would say it's a tad overpriced and not exactly the time to buy just yet, with a PE ratio at 20.9 and analysts even rating this one a hold for now. However, if you are holding Southern Company amidst all of this volatility, it remains a solid investment and reliable during times of uncertainty. As for me, I own 10 shares and I received $6.90, given their dividend yield is coming in at 3.92%. The following day on March 7th, the one and only Johnson & Johnson, ticker symbol J&J, paid me a dividend. Now, I already know I don't need to say much about J&J, but I do feel it's always worth it to share that this is one of the most powerful, most reliable, most stable dividend stocks, especially within the healthcare sector, with decades worth of dividend growth and only more advancements in medical technology as well as pharmaceuticals to come. Right now, Johnson & Johnson is trading for only $153 per share, down by 12% from this time last year, and although that PE ratio is at 22.5, it's a bit of a premium for a dividend powerhouse, but it's always worth it, which is why we've seen hedge funds loading up on Johnson & Johnson, as well as analysts who remain optimistic with about 16+% worth of upside, with the share price climbing back up to $179.20 per share. Now, as for me, after just scoring more shares to reach my 100 share count goal, I am all in on this gem and received a whopping $86.28 for those 100 shares, given their dividend yield is coming in at 2.95%. Next up, on the 15th, we had 2 real estate investment trusts pay me dividends, the first of which was Stag Industrial, ticker symbol STAG, which is primarily focused on the acquisition and operation of industrial properties, so think along the lines of warehouses as well as fulfillment centers. And a matter of fact, some of their biggest clients are Amazon, FedEx, and XPO Logistics. Now, Stag Industrial currently has 562 buildings in their portfolio, and honestly, I can see them scaling after these economic conditions smooth over, but they have certainly faced some challenging times, hence why their stock share price remains down on the year by 17%. As of this video, it's trading for $33.35 per share, yet this $5.9 billion market capitalized REIT has a fair amount of analyst attention, with a forecasted share price of $42 per share. It's about 25% worth of upside predicted from top analysts. Now, if I'm honest, I do think this is a solid investment, but I'm more focused right now on trimming my portfolio, so I'm not going to be adding to this position anytime soon. I will, however, continue to hold my 29 shares, which allowed me to receive $3.64, with that dividend of theirs coming in at 4.36%. However, Realty Income, ticker symbol O, is a REIT that, despite owning over 100 shares, I'm still actively focused on, especially as it's been sliding, whereas right now it's hovering around $62 per share. Realty Income is a leading net lease solutions REIT with a massive portfolio comprising of over 12,000 properties across the United States and well into the UK and Spain. In terms of safety, we're talking about over 1,200 clients with a 99% occupancy rating. Now, recently, hedge funds have been loading up on shares worth of Realty Income, which makes sense with high inflation remaining well above comfortable levels. And as for analysts, they too are optimistic about Realty Income's future, with a share price just over $70 per share predicted, which works out to over 13% worth of upside. Now, as for me, with 103 total shares of Realty Income, I received $26.37, given their dividend yield of 4.88%. But the 15th wasn't just a real estate payday. I also had McDonald's, ticker symbol MCD, pay me a dividend. Of course, Ronald McDonald and the gang doesn't need much of an introduction, as this fast food chain has taken the world by storm after its founding in 1940 to become a literal global icon. When it comes to McDonald's, it's all about investing when the stock is actually either fair or undervalued, which is hardly ever the case, but this is again pretty standard for some real safety in the market. As of right now, McDonald's is trading for $277.44 per share and has only continued to perform well, actually experiencing plenty of momentum recently, as it is up over 13% from this time last year. At this moment, I'm not a buyer of McDonald's, but as hedge funds prepare for volatility, McDonald's was certainly favored, and more upside is forecasted by analysts, with the share price climbing up over 6% to $295.33 per share. I will, however, continue to enjoy my 3 shares, which allowed me to receive $4.69, given their dividend yields coming in at 2.09%. Now, Tyson Foods, ticker symbol TSN, also paid me a dividend on the 15th, and it's a recent addition to my portfolio. And I couldn't help myself but invest into Tyson. It's the second largest beef, chicken, and pork processor in the world, while also being the largest exporter of beef in the United States. And after this industry leader slid by over 32% from this time last year, trading for $58.25 per share, just couldn't resist, with the P/E ratio coming in at 8.4, and more positive indicators of large sums worth of investments from hedge funds as well. Now, it will take time to recover, I do want to be clear, and that makes sense as the cost to feed is higher and labor is more expensive, which ultimately drives up prices and keeps meat eaters at bay. But we're talking about a serious player in the meat game. Anyhow, I bought 22 shares not long ago and therefore received $10.56 thanks to their dividend yield coming in at 3.22%. Jumping to the 21st of the month, another dividend paycheck came my way from Stanley Black & Decker, ticker symbol SWK. It's the world's largest tool manufacturer, and in my opinion, most noteworthy. It's the supplier to our home improvement retailers like the Home Depot and Lowe's. And why is that important to note? Well, I always say go right to the source, and while it may be intimidating with the stock having plummeted over 43% from this time last year to a share price of $77.91 per share, it all makes sense. We're not in the economic environment for DIY projects, nor a housing boom, so naturally this industry leader has taken a hit with a P/E ratio way down at 11.1. But check this out, smart money has been all over Stanley Black, and I'm here to say that they will be back, along with analysts sharing the same sentiment, coming back up to a share price of $96.50 per share, which means nearly 24% worth of upside. As for now, I'm going to kick back and relax with 20 shares that allowed me to receive $16.25, given Stanley Black's dividend yield coming in at 4.09%. Now, on the 24th of March, Lockheed Martin, ticker symbol LMT, paid me a dividend, and if I'm being honest with you, this is a position that I wish I scaled much more than I did when I had the chance. Lockheed is a go-to aerospace, arms, defense, and information security technology defense contractor, meaning some serious firepower in terms of profits and moreover overall reliability with clients like the United States government and our allies. But is it a buy right now? I would say it's a tad overpriced, as it's been performing quite well. It's up on the year by nearly 10% at a share price of $474 per share, with that P/E ratio a bit higher here at 21.7. Now, we also see plenty of informative selling going on amongst insiders, from senior and executive vice presidents to the COO himself, which is not exactly a positive sign. However, I'm just going to sit tight with my 5 shares and continue to collect on the dividends after receiving $15.51, given their dividend yield is coming in at 2.45%. Last but certainly not least, 2 massive dividend paychecks came in from the foundation of my portfolio from 2 index funds. Vanguard's Total Stock Market Index Fund, ticker symbol VTI, and their Total Stock Market Index Fund Admiral Shares, ticker symbol VTSAX. Both have over 4,000 companies within them and really just run with the market. So I always share that dollar cost averaging into similar funds is just the fail-safe strategy for all investors. Now, ultimately, I received $139.79 combined from both funds, which now leads me to the grand total for the month of March. Investors, are you ready for this? A brand new record coming in at $309.99. And if we jump right into the dividend tracker, we can see we are on track and pacing towards my goal of bringing in over $3,000 by the end of the year, which would be $250 per month passively. But what a sight to see as we double the income each month from the same time last year. The true power of the dividend snowball. Now, if you're ready to take your dividend investing to the next level, join me by simply subscribing, because all I can tell you is it's going to be one heck of a year. And if today's video brought any value to you as a dividend investor, tap on that thumbs up button. But I'm also curious to know more than anything how much you brought in during the month of March. So be sure to also leave a comment down below with your monthly total and the top dividend stocks that paid you out in dividends throughout the month of March. Until next time, we'll see you all in the next video.